Welcome to BizTech Conversations. I'm Brian Fernandez. On BizTech Conversations today, we have Elain Lockman, the co-founder of Atta Plus, one of Malaysia's first equity crowdfunding platforms. Welcome to the show, Elain.
Hi, Brian. Thank you for having me here today.
Yeah, Elain, it's been about 2 years, just over 2 years since I interviewed you on BFM.
That's right.
Nice to see you again.
Likewise.
Could you give us an overview of what Atta Plus does?
Okay, Atta Plus is a regulated crowdfunding platform, equity crowdfunding platform to be specific. We are regulated by the Securities Commission of Malaysia, and we are a platform whereby we match businesses who are seeking funds specifically from the crowd, and we screen these businesses, and upon meeting the requirements, compliance requirements of the SC, then we actually publish their fundraising campaign on our platform and to present that to the public. That's what we do, yeah.
And what's changed with Atta Plus over the last 2 years?
I think what we've done is really we've further refined our processes, made it more crisp, and in terms of turnaround time, screening turnaround time, it used to be like 14 working days. So especially with COVID, what happened with COVID, we streamed it down, to 5 working days.
That's really quick.
Very, very quick. I mean, of course, that's subject to the completeness of information that's provided by the business owners to us. Yeah. The other thing is we have looked at more on the go-to-market strategy, especially for our issuers. Okay, because we've seen what worked, what didn't work, so we wanted to make sure that for each issuer, there is a clear fundraising strategy in terms of looking at the kind of investors they're targeting, whether it is used as to market and promote their brand or even products, or even amalgamation of the two. Yeah. The other thing is we looked at is that specific areas on data, data, big data especially, and also how that would assist businesses and ourselves and even our marketing campaigns. And moving forward, looking at how to scale, a scaling strategy. So those are the kind of things that we've been, looking at in the last couple of years, since we met.
Now, so how long does it now take with your streamlined strategies? How long does it now take for a new issuer? Let's say my company wants to be equity crowdfunded. From the time we see you to the time we're actually on the platform and raising capital, how long would that take?
I think, so let's qualify that. So, I mean, the thing is, issuers see us all the time, right? So from the time they see us to the submission of documents can take some time.
Okay, let's say from the submission of documents.
Yeah, so say from the submission of documents, if say on an ideal scenario when, everything is perfect, right? So if we take 5 working days to screen, and then we'll take another, say, 2 weeks to do iron out their content, and then they're ready to go to market, and then they can immediately go within 3 weeks, I would say.
Okay.
But however, in reality, very rarely it happens that way.
What's the typical timeline like?
I would say about the fastest probably 1.5 months.
Okay.
Yeah.
That's a reasonable timeline.
Yeah, 1.5 months. I think typically, I think what we find, that slows it down is documentation. Yeah, specifically on financials, financial projections, audit report, management accounts. Yeah, that's one of the documentation side. But for once that's done, the ones that generally slows it down as well is, I would say, packaging the term sheet. The terms of offer, I think, is one of the things that actually slows it down. I think content is not so, because it's more of making sure the content, the story is right. The content is presented in the right way, not too much words, but more on visuals and I would say the key value proposition, the key investment propositions that would attract investors. Why should you invest in my company? Yeah.
And also one of the key success factors I think we need to look at, and therefore that takes a little bit more time, if you look at some of the successful ECF issuers, was the fact that they've actually been talking to investors way before they've even submitted their documents in order to go public, in order to raise funds.
Okay, I think you should take that out of the equation. I wouldn't say that is the key success factor. I would say there's many key success factors. You know, people always ask us this. So it is not just one. It is quite a number. It's a combination.
Give us what your reckons in terms of the key success factors.
I think I just want to bring back, you know, what you were alluding to earlier, you know, about them securing funds earlier. I would say call it a commitment of the promoters. The promoters need to commit to fundraising. I mean, Brian, you've done business as well, you know, and you need at least one person to focus on fundraising, and the commitment to fundraising has to be there. You know, that's number one. Number two is
which is also a very difficult thing in a startup with, say, 2 or 3 founders,
yes,
where one person literally has to be committed for several weeks to look for money.
Yeah, absolutely. You know, so I think we've had a situation or scenarios before whereby companies think that when they work with an equity crowdfunding platform, oh, it's as simple as, okay, I list my campaign, my fundraising campaign on the platform, I just sit back and suddenly the money just appears from nowhere. You know, so it doesn't, it doesn't happen that way, you know. So
it doesn't magically fall from the sky. No,
you know, you need to work very, very hard, you know. The reason why you're working with an equity crowdfunding platform, because you can now openly, publicly solicit investments, from the crowd, from the public. Otherwise, you know, you've got to go for an IPO process, right, to get listed on the stock exchange. So that's number one. So understanding the commitment, number one. Number two, of course, you have to look at other key success factors like your traction, your management team, the terms of offer, you know, how you design it, you know, and I would say
valuations, of course.
Yes. That's one of the key things, you know. So valuation comes into play, your minimum investment amount, you know, the kind of target market that you're looking at, target investors. So
and that's an interesting point. I want to take that up, that minimum investment amount. Atta Plus, compared to some of the other ECF platforms, seems to have a lower ticket size. Is that a deliberate strategy on your part?
No, it's not a strategy on our part. We typically would discuss with the business owners, with the issuers, why would you want to price it at, say, 100 or 10,000 or 3,000? There's always a reason to it. It's not because, you know, it's not our Atta Plus strategy, put it that way. And the thing is, we always tell the business owners is this: the moment you price it above 5,000, right, you totally eliminate the retail investors. Okay. So the question is, do you want retail participation? And if you do want retail participation, for what purpose? Is it because you actually want to, you have this inclusive mindset, that means you want to open it up to the average Joe, you know? Or is it because you actually are looking at a strategy of maybe getting them to also be your customers and your brand advocates in the future? So, you know, it really boils down to the fundraising strategy of the company. So we talk quite a bit on strategies with the business. And we design different strategies for different companies. So it's not a one-size-fits-all kind of, you know, go-to-market strategy with your crowdfunding campaign. Okay.
Now, Elain, let's take let's zoom out a little bit and take a more macro view. Is the ECF landscape as a whole now a much more fertile ground for new issues, because there seems to be appetite for ECF investments? Could you just give us an idea of, you know, what's happened, particularly in the last 2 years, in terms of appetite, in terms of ticket size and number of deals?
I think there's more and more people who are looking at ECF as a feasible fundraising platform. And I think in the last couple of years, what has been exciting, being made more exciting, I would say, is also because the government has introduced a co-investment fund, whereby the government, the Malaysian government, co-invests with the public
And that's via the SC, correct?
Yes, that's administered via the Securities Commission. So it is called MySafe, or Malaysia Co-Investment Fund. And for every 4 ringgit the crowd invest, the government will match with a ringgit. So for example, if the crowd invests 400,000, the government will match with 100,000 ringgit. Excuse me. So
and that's up to what ceiling?
Okay, it's up to 500,000 ringgit per company.
Okay.
All right. And the budget is 100 million budget.
Okay.
Yeah.
And how much of that is utilized?
Before that.
Sure.
So during when COVID-19 hit us, yeah. So the association, so there is what we call a registered digital market association, is an association for both ECF and P2P. Whereby currently I'm the president. So as an association, we actually went back to the SC and requested for the SC to support SMEs during this period. Yeah, and we said, can they consider making the ratio more aggressive? From 4 to 1, can they make it more aggressive? I mean, we wanted to have it like 1 to 1 if possible. Yeah, I mean,
well, you have to. If you don't ask, you'll never get.
Yeah,
right?
Absolutely. So you get. You try to ask for the sky, right? If you get in between, well, that's not too bad, right?
Exactly.
Yeah. So the government has kindly considered, and on the 3rd of April, they informed us that they've revised it. For every 2 ringgit, the government will match with 1 ringgit, which is very, very good.
Is that how long is that valid for?
That's valid for 6 months, and it's valid up to 30th of September.
Is that going to be extended?
We have put in a request. And we hope that they're taking the request in a favorable manner. Yeah, I've actually requested for a 15 months extension.
Okay.
For recovery, because.
Okay.
It's going to take time.
Yes, of course.
For business to recover, right? We may not get 15 months, but I'm sure we'll get some months, right?
Okay.
That's one. And I've also requested for a further increase in the budget. Yeah, from 100 million, maybe, hopefully we get more for this coming year's budget.
Okay.
And so it's up to 30th of September, so hopefully, yeah. So I just want to add on to whilst they have also revised the ratio, they've also revised the ceiling.
Okay.
So the ceiling from 500,000 per company is gone up to 1 million ringgit per company. Yeah. So, and I must say that, ever since that's introduced, there's more and more companies coming forward, to fundraise. And I think it's also because the crowd is also now more confident, since the government, is also co-investing with them.
So that's I think the big change in the last 2 years. There seems to be the anointing by the government has given a lot of comfort to investors.
Yeah, and also because Brian, we are now in the 5th year of equity crowdfunding. There are still a lot of people who are not aware of this investment asset class, and I mean, initially we thought it could just be a phenomenon in Malaysia, but I was pretty shocked, that for example, I interacted with quite a number of big fund managers from the US, and these are the big boys. They don't know equity crowdfunding. It's very. They
live in their own little bubble as well.
Yeah, all they know is that their bubble of investment,
yeah.
Fund management, the big numbers and so on, right? Yeah, so it is pretty interesting. So it's not just in Malaysia, but I would say across the globe, there's still a lot of people who are not aware.
Okay.
Of ECF.
Now, one of the things which is a game changer in the ECF space is now the ability for investors to trade their shares.
Yes, that's correct.
Can you tell us more about that and how Atta Plus sees the impact on your business?
Yeah. Okay. So let's look at the conventional way, of when you say trade shares. Actually, even now as we speak, it doesn't stop anyone to trade their shares if they want to do so, like offline.
But it's illiquid. It's very hard. The matching process that an exchange provides, which is what you're going to talk about, is completely different.
Absolutely. So this way, the investors can actually, get some some of the returns back, in the interim, if they do not want to wait that long, for them to get the upside or whatever you call it, right?
Yeah, because some investor appetite, if you look at the funding landscape in India, for example, which is more unusual compared to some of the other Western markets, a lot of the angel investors take out their money during the funding process. They don't stick with the company for the long haul. If they get a 2x, they are out already. So this is an opportunity for those sort of investors then to invest in ECF companies.
Yes, absolutely. I mean, I think, of course, if you ask me, or if you ask us, the secondary market, which is what is called, the secondary market, the closed secondary market, which facilitates the trading of the successful equity crowd-funded companies, it is the biggest upside, I would say, is the investors, or are for the investors, right?
How about for the new issuers as well? It's very, very clear for the investors, but how about the new issuers?
Okay.
Do you think that's going to have an impact for them?
Okay, so for issuers, I think they have to understand, right? So this is to us for them to really understand what it takes for a company to go listing, okay? There will be certain listing requirements, I would say specifically on reporting.
Okay.
Because generally when you report, that's when people know the performance of your business.
Right.
People understand, then you can actually get the metrics and go on. And there will be a certain, I would say, requirements, But looking at it right now, if you ask me, just my first take and what we've started working on the principles of the platform, reporting is a key thing.
Yes, absolutely. Just like it's an exchange. You need to have periodic reporting.
Yeah, correct. And at the moment, it doesn't mean that you close your campaign tomorrow, you can start trading on the secondary market. Currently, if you look at the SC guidelines, you need to be off, from your successful date of fundraising. There needs to be like a six months cooling off.
Okay.
Then only you can actually register yourself.
Okay.
Be eligible.
And will there be any restrictions on issuers? On issuers trading their shares?
Okay. So
because it's just like an IPO and a lockup period. Is there going to be a lockup period for issuers?
So I believe there is, if I'm not mistaken, I've got to go back to the guidelines. I believe there is some mention there in the guidelines. But let me check on that again.
Okay.
All right.
Now, one of the things, Elain, that we need to speak about now, zooming back to Ata Plus in particular, is your recent investment deal with GreenPro Capital out of NASDAQ. Can you tell us more about that?
Okay. So Ata Plus has been fundraising actually. So we have been looking at fundraising ourselves for our growth and expansion. So we've been looking at fundraising since early 2019, or I would say end of 2018, actually, and Brian, fundraising is not easy because with fundraising you need to make sure that who you fundraise with and the kind of companies or organizations that you want to get in bed with is someone who understands you.
Yes, and your goals and objectives need to be aligned.
Correct, and the vision, and so and we are also quite picky, on who we want to, who we want our investors to be, because at the end of the day, it's not just about the money, but it's also about how the investors can also help us in terms of our growth roadmap, and it will be great also if they can accelerate our growth and expansion in the region or globally. So and to cut a long story short, so we were introduced to GreenPro just literally, I would say, 3 days before Hari Raya. And this was the Hari Raya Idul Fitri.
Okay.
And it was a Friday. I remember that very clearly. It was a Friday. And GreenPro Capital they have an office in Malaysia. And
is that to look for deals?
No, actually, the meeting was specifically, it was very clear, it was a meeting whereby they are interested to invest in us.
Okay.
Okay, it was very clear. So we had a 4-hour meeting.
Wow, first meeting, 4 hours.
4 hours meeting whereby we shared about ourselves, they shared about us, and we even had a Zoom call with the chairman, Gilbert, who was in Hong Kong. And by the end of the meeting, they already said this is how they want to come in. They like us. They see the synergy, and they said think about it, And after Hari Raya, on the Wednesday, we already received the
term sheet,
the draft terms of offer.
Wow.
Yeah.
That was really a quick deal making, Silicon Valley style, really quick.
Yeah, very quick.
What sort of valuations did they give you? I mean, what was the 15% for?
A few million US dollars.
Okay.
I should not be,
but I know it's already a month plus.
Yeah.
You could share the number with us. Come on, Elain.
But I must say that it was beyond. When we were fundraising, we actually valued ourselves at a certain amount.
Okay, which was how much?
Brian. Okay, so we value ourselves. I'm not going to share the numbers, at a certain amount, but they actually topped it up. They won beyond 20% above that.
Okay.
Yeah.
Okay, so how much did they invest in you?
15%.
No, how much in dollar value?
Some dollars. Okay. I'm not going to disclose at this point in time. Yeah. So, but it was a good deal because we actually get liquid shares in Nasdaq.
So there was a share swap was part of the deal?
No, it is, this I can say, it is actually a 100% share swap.
Okay.
Okay, it's a 100% share swap.
Okay.
Okay. And to us, it shows that we are in the game, and we believe in their model, and we believe in their vision, and they believe in us too.
Okay.
So moving forward, why them and not somebody else? It is not just about them being a Nasdaq company. GreenPro got listed on OTC in 2014, and they uplifted themselves to Nasdaq in 2018. Yeah, and they started out more of a financial services company in the conventional space. Yeah.
Okay.
So they've got about 7 licenses out of Hong Kong. They're Hong Kong based. Yeah. But after their listing in Nasdaq, they wanted to look at how can they actually expand their services in this alternative ecosystem, in this new ecosystem. So they started to identify potential strategic partners that can, add value and further strengthen their value proposition to new players. Yeah, and so they can look at new markets and expanding their business in other areas too. Yeah. So, and they see Arta Plus as a good fit. Yeah.
And what's in it for Arta Plus? How does that impact your strategy moving forward in the next 12 and 24 months?
Yeah. So for us is in terms of the value of GreenPro, we are looking at deal flow as well as access to international investors, which is actually one of our key strategies.
So when you talk about deal flow out of Malaysia?
Both within and out of Malaysia.
Okay.
Okay. So regional deal flow, number one. Number two is access to international investors.
Okay.
Number three is strategic collaborations with their, I would say our sister companies right now via GreenPro, because GreenPro have invested in fully operational SDO platform.
Okay.
And
sorry, could you elaborate on that? What's an SDO platform?
SDO is securitized token offering platform.
Okay.
Okay. Out of Philippines.
Okay.
Yeah. The licenses, they are licensed in the Philippines. So we want to see how we can work with them in terms of moving forward, especially in terms of the technology, in terms of secondary market and beyond, right? So to us, when you talk about secondary market trading, company shares is just one type of security.
Yeah, of course.
Yeah.
Yep.
So there can be other types of securities that can be tradable.
Yeah.
Yeah. So we are looking at potentially maybe others that make sense to our business.
Okay.
Not just for the sake of it's something nice to have.
Yeah.
So it needs to actually complement the story and also the business. Yeah.
So it could be, we could see you in the ICO game in the future, perhaps?
I won't call it ICO.
Okay.
IEO maybe.
Okay.
Possible. Yeah. If we think it makes sense for the company.
Okay.
Yeah. So so to us, all that will actually help us in our accelerating our market expansion and growth. And with them, we do have a very clear, because they have one of their advisory services is actually in terms of supporting businesses for listing, yeah. And with them, they have clearly mapped out the roadmap for listing for us, and the value add.
And what sort of timelines is that?
We are looking at our target is Q1 next year.
Okay, that's pretty soon. And where would that listing?
For now, we're targeting OTC in the US.
Okay.
Yeah. And with that service as well, we want to be able to extend that service to also our issuers, and issuers who have that potential to go for listing like within the next 6 to 12 months. And for these guys, you know, who they don't have to wait for another 5-7 years to go listing. It's always a strategy of the business. Why now? Why not later? You know. So at the end of the day, it boils down to the strategy of the company. Yeah.
Okay. That is, I think the synergies are very, very clear. But now I'm going to take it a little bit more personal. And we've talked about the business.
Yeah.
Now you've been in this business for 5 years, and it's been a tough journey.
Yes.
Could you share perhaps some of the lessons that you've learned during these last 5 years? Because you're on a roadmap to listing now. You see light at the end of the tunnel. Obviously, that's the next stage. But for a lot of entrepreneurs, listing is really one of those milestones in life. What have you learned in this 5-year journey so far?
Yeah. I think, you know, as and I always say this to especially young entrepreneurs, right? You need to really have passion in this business, you know, passion and belief in your business. That's number one, because if you do not have that, then don't bother, you know. This is not a game. It's not a nice to have. Yeah, it's not a hobby. Yeah. And you want to create something that means something, you know, and that's number one, passion. Number two is the intent. Why are you doing this? You know, again, I want to come back to what I just said. You know, it's not a hobby, it's not a plaything. Why are you doing this, right? Because once you have that established, then the commitment comes in to the business, right? And how much are you willing to put in the business? It's not just money. It's a lot of time and effort, basically your life, yeah, especially for a startup company. And you need to bring in the right team. Team is so important. Now, if you have partners, you need to make sure that you have good chemistry with your partners, and the partners need to understand their role in the company. Very, very important. Yeah, alignment is so important, and I'm not saying that the partners need to, you know, it's all hunky dory all the time, but have you know, you can have good deliberations. You can agree to disagree, and at the end of the day, all good and well. Decide, you know, move forward with a key, clear strategy and decisions. You know, that's very, very important. Okay, so choose the right partners and the right team. Okay, why I say that, especially on the team, is that the moment you bring in the wrong people, it's very difficult to get them off. Okay, take time to bring in the people. Don't just bring in people because you're desperate. Okay, if say you are desperate, okay, there's always a strategy of how your hiring strategy. Hire them on a short term, and then If they are good enough, then only absorb them, you know. So always have that in mind, all right? And I think finally is, I would like to say this, and this is through my personal experience, right? Because I've put in everything I have in the company, and I'm talking about the dollars, right?
And your heart and passion.
Oh, yeah. So, but at the end of the day, the money is important, yeah, because I would, on hindsight, I wouldn't have done what I've done. I think you need to keep a bit for yourself, yeah. And I remember, I think it was just before MCO. I think it was in somewhere in February or March. So there was this entrepreneur pitching, yeah. And when he shared his financial projections and he talked about how his spending, yeah, and he said, "Oh, I'm not paying myself, you know, I'm not paying myself a lot. I'm paying myself only 2,000 or 1,000 ringgit." And I said to him, "Are you serious? You know, you don't do this to yourself, because you need to, in your financial projections, you need to pay yourself a reasonable salary. Yes, you're a startup. And of course, when you're a startup, even when investors look at the startup, right, they don't expect the founders to pay themselves $30,000, you know.
Yep, absolutely.
Yeah. So, but you don't kill yourself and pay yourself 1,000 ringgit either, you know. So, you need to take care of yourself, because you need to have peace of mind as well. Yeah. So, I mean, you know, I wouldn't do that again, you know. And sometimes people say, oh, you know, a smart entrepreneur will not use their money, they use other people's money. But having said that, you still need to put your skin in the game.
Absolutely.
You know,
and that gives the investors confidence.
Absolutely, you know. So, and my last piece of advice is that, you know, not everything works from the beginning, you know. So if it doesn't work, then pivot or just refine it or whatever, you know. But sometimes, you know, if it totally doesn't work, you need to give yourself a deadline. If you feel, you've tried so many things and at the end of the day, it's not gaining traction, nobody's buying your product or service, then you've got to make a hard decision. Do I just shut it down and do something else?
Absolutely.
Yeah.
Yep.
Sometimes it's all about timing, you know. We did this, you know, or we came up with this idea way before it was regulated.
Yes, I remember that,
Yes.
because you were going around and trying to sell the idea.
Correct, you know, and we had a prototype and it was a really good deal, you know, and this was, I think, about 10 years ago.
And you also wanted initially to do ECF as well. I mean, peer-to-peer.
Yes, it was peer-to-peer.
Yes.
You know, but at that time, people couldn't understand the concept of crowdfunding. So, product is good, value proposition is good, but timing is not right. I think you see this a lot with the technology, you know, especially with the MP4 or MP3 technology. It was there when, 1997,
Yeah.
remember? Yeah, but timing was wrong, you know. And I can tell you, if mobile technologies were available then, at that time, it wouldn't work, because broadband
was not able to cater.
Exactly.
We were doing dial-up lines.
Absolutely, you see. So, you know, sometimes it's just about timing, sometimes it's about luck, you know. But you can't replace perseverance, commitment, you know, having the right talent pool, yeah, and the intent, you know, very, very important, you know. So to me, that's key, yeah.
Elain, it's been a pleasure having you on BizTech Conversations. We've been speaking to Elain Lockman, co-founder of Atta Plus. I'm Brian Fernandez on BizTech Conversations. Check us out on www.biztech.asia for interesting insights and conversations about business and technology.